Wayne, it was interesting looking at the Long Sen's announcement, the announcement of the results. 4 lines devoted to print.
Yeah.
And of course, Naspers used to be a newspaper company, and it just shows, that symbolizes it. And it said with the print, we've cut costs. Revenue hasn't really gone up, and just breaking even.
Breaking even, yeah. Well, look, I mean, print is taking major. I mean, you can just look at what's happened to glossy paper demand for SAPI. You know, printing is not what it used to be.
Yeah.
But I mean, the Naspers results were very, very good. A lot of it is the weak rand. So if the rand had to strengthen, they would reverse next year, reverse a lot of that earnings growth. But I mean, if you're a rand investor, a weak rand is still earnings. You know, the earnings generated by weak rand is still earnings.
Well,
I must say, I'm still worried about the current PE. You know,
it's a big fat 50, isn't it?
Yeah, well, look, this will dilute it a little bit. But, I mean, I was very happy with the 25, 28, 30 PE, but a 50 PE, man, it just seems too high for me.
Too high for you?
It's too high. I think what the 50 PE is telling you is that South Africa pay TV is still a large part of the profitability. The revenues are internet-based, and there's a lot of development spend that's going into the internet businesses over the next 5 years, which are supposed to now contribute more than the pay TV locally. And the 50 PE is telling you that in 5 years' time, those will definitely generate significant profits. So you're almost paying for that.
Now, the internet revenue is up 44%, and for the first time it's more than the pay TV. So if you like, it's gone from print to pay TV, and now the internet is the next big thing.
Yeah, look at it, I mean, and the development of e-commerce. I mean, they've been in the internet for a long time. Just haven't been able to persuade the users to cough up with some cash.
Yeah.
Now they are doing that.
Well, a great trick with the internet is how do you make money out of all these
it,
sites that you have on it? Well, the company said that they hope to expand the e-commerce businesses, that's what Wayne just referred to, across more emerging markets. And on the line is Arthur Goldstuck. He's a frequent guest in the studio. He can't be with us tonight. He's MD at Worldwide Works, taking a look at what opportunities there are for Naspers to grow further. Good evening, Arthur. And it struck us looking at the results this morning, how one of the phrases was, they are interested, Naspers, in disruptive technologies. They talk about, for example, the shift from laptops to tablets and other kinds of gadgets, and saying that these disruptive technologies are actually opportunities. So the trick to justify that very high price of that share at the moment is to convince investors that they're going to discover new things and find new ways of making money.
Yes, indeed. Good evening. Chris Becker was actually an early believer in tablets, and he was one of the guys who pushed his own company to develop apps for their publications at a stage when only the executives really had iPads on which to read those apps. But I think he kept the faith, and that kind of faith extends to his belief in e-commerce and other internet platforms as well. And I think one of the real hidden secret weapons, you could say, in these results is the increase in development spending, research and development, or developing new products. And I know there's a strong focus in that on extending pay TV into Africa, but equally there's a strong focus on developing e-commerce and internet opportunities. 50% increase in development spending to around $4.2 billion. That's a statement of intent, and I think what they have recognized as well is just how powerful those emerging markets are going to be in terms of e-commerce. Poland and Russia, e-commerce is still a very small proportion of overall commerce, but growing very fast. And it's those kind of markets that are off the radar of the big American investors and the big e-commerce players in the United States and Western Europe. So there still remains those kind of opportunities to be exploited, taking the relatively small players in small markets, because those are going to be the big growth markets of the future.
Yeah, just talking to Wayne and Claro here in the studio, Arthur, that price that flashed up on the screen, there's 676 Rand at the moment. That's the highest priced share on the JSE at the moment. I suppose really what that premium is about is betting that they're going to find things we haven't thought of,
well, they're
going to make money.
They're going to convert users to e-commerce to pay for the services rendered and sell them apps and make a turn on the classifieds. I mean, Koos said he's going to go into classifieds, he's going to do sort of business-to-business e-commerce. But look, I mean, this is an industry that evolves all the time. You know, literally not that long ago, you couldn't touch BlackBerry. It was just the industry. Now it's, it's almost not quite fighting for its survival, but not
It's a bit of
far
a
off that
dinosaur.
either. Yeah. You know, so these things can change very, very quickly.
Actually,
Yep.
I just want to ask Arthur a question. Arthur, this capex and development spend, the R&D spend, that's as significant as we've seen. Is it in response to competitive pressures from whoever they're competing with in those markets, or is it a preemptive strike to take first mover advantage?
Seeing a preemptive strike from Naspers, the investment in Tencent, in Mail.ru, and their position in Eastern Europe and East Asia, I think is something that very few of the Western players saw coming. And Naspers invested quite early in those. So I think most of its investments will be aimed at those kinds of opportunities. Tencent in particular, with its QQ social network, is again one of those secret weapons that to the Western world doesn't exist, but in fact QQ is one of the biggest social networks in the world, beaten only by Facebook at this stage. And there was an interesting number in the results. At one stage in the 2013 financial year, there are 173 million concurrent users. That's people on the platform at the same time. I think even Facebook struggles to get to that kind of number. And those users get monetized over time, and that's where even greater growth potential exists.
Yeah, it's the monetizing, isn't it, of that presence. Thanks, Arthur. That's Worldwide Works Managing Director, Arthur Goldstuck. Well, just a quick word to wrap up there, Wayne, on Omnia. Good results for them there
very
today.
Good. The company's done very, very well.
But surprising too, they said mining had been very strong, but our impression is that mining hasn't been very strong.
Well, I suppose it depends where your markets are and where your consumers. No, it's a very good set of results.
The value in the share, Carlo?
Well, I'm not a holder of it, and I suspect at this point I've missed it.
Oh, simple as that.
I suspect.
Well, they have record profit. I think it was 880 million, the highest ever.
Yeah, they've done very
40% revenue. Those are good numbers for this. Just have a look at the rest of the week here coming, and given what the markets have done today.
Who knows? But we're unlikely to see as bad a week as last week. I mean, that was really bad. But even at 38,000, the market's not cheap. It can go back to 42,000, but I doubt very much whether we're starting a new bull market. So people mustn't get sucked in here. However, having said that, there's virtually, in my view, virtually no chance of a major 30-40% fall in the market. There's just too much liquidity around for that.